Let's put the spotlight on RPG Life Sciences. In Q3 of FY25, the company delivered a very strong set and hence the stock price reaction as well. But let's understand more about the outlook of the company, and we have been joined by Yugal Sikri, who is the MD of RPG Life Sciences. Good morning, Mr. Yugal, and thank you so much for your time. First up, congratulations on a great set. It's been indeed a strong quarter wherein not just your India business has once again done well, but your international business has also shown a double-digit growth. Even the API segment has performed very well. Help us with the outlook of Q4 and beyond. That can we expect this double-digit growth trajectory in the international business to continue? And for the full year of FY25, where do you see the sales headed?
Thank you, Srishti, for inviting me on the channel first, and thank you for the compliments for the results. Give me just a minute to contextualize and that would perhaps answer the question for Q4 as well as for the next year. The RPG Life Sciences growth story has been a very consistent growth story. Which means every year after year, our EBITDA margins have moved up. We used to have 11% margin. Today, we are on a 9-month basis, we are 27.8%. And this quarter, you have seen EBITDA margin going 30% plus. So the whole growth story has been a structural story. What do I mean by structural story? That we have the 5 pillars of growth fixed up for the domestic business, similarly 5 pillars of growth for the international business, and we are simply continually working on those 5 pillars, which has helped us. Basis which I can share with you with the confidence that the Q4 performance would be in line with what the trajectory you have seen so far. The at year-end performance also would be in line with what the trajectory you have seen so far, and going forward for the future years also is going to be accordingly. Now, we have 3 businesses, just to recall. 2/3 business comes from domestic. Remaining 1/3 comes from, 19% comes from international formulation, 15% comes from API. As you rightly mentioned, we had a very strong 5-pillar strategy for domestic formulation, which has given us the results. The results are always ahead of market growth. We are currently at 1.6, 1.7 times of the market growth. Absolutely. Now we have both international formulation, API also contributing, which will enhance the business growth going forward.
Sure. What about the enhancing, business growth? You're talking about how momentum will continue, but the question is, FY26 going to see accelerated growth versus FY25? Because if I have it right, you're also looking at acquisitions. Is anything likely to materialize that can bump up the inorganic contribution?
Yeah, I think you have correctly noted and pointed out. Yes, the going forward FY26, when we have all the 3 growth engines, domestic formulation, international formulation, API, started firing, will have an impact. But the greater impact is likely to come in FY27. By that time, both the international formulations and the API plant will be functional. Not only functional, we'll have a new product pipeline also start showing up, and you'll see the commercial impact on those. Now, on the inorganic part, I can tell you we have around 159 crore as the cash surplus on our accounts, now on our books of accounts. And we have done the land assignment recently, which is also giving us a cash which will be 200 crore plus overall put together. And with that kitty, we are very, very actively looking at the acquisition. Acquisition is both in the formulation and the API space. Whatever gets materialized, as and when it gets materialized, you will hear out yourself.
All right, Mr. Yugal, my next question was related to the land monetization itself, the 200 crores that you are going to add in your kitty. Help us understand that where do you plan to deploy that? Is it only like the brownfield acquisition that you are looking at, or any plans for deploying more in the greenfield side as well?
Yeah, it actually, we are evaluating all kinds of opportunities, to be frank. We are looking at brownfield, we are looking at greenfield. Wherever we see a greater value accretion happening, we will actually opt for it. But only thing which I can assure you that we are active. We are active on the API front also very much as we are active on the formulation front.
On On that note, we'll let you go. Thanks so much for making time and speaking with us today. That's the management of RPG Life Sciences talking about their business. But from one pharma company perhaps to the other, maybe we can welcome on board the management of Laurus Labs as well to talk to us about what the expectation is from their business going forward. And we do have the management joining us, Mr. Satyanarayanan Chava, the founder and CEO at Laurus Labs, with us on the show. Hi, Mr. Chava. Thanks so much for making time and speaking with us. Before I come to the numbers, the biggest talking point in the market this morning has been that funding pause that has happened to some of the AIDS projects in the in US and the other parts of the globe as well. How does that impact your business?
Amount of money spent on purchase of drugs to treat HIV is about $1.5 billion, and all agencies and governments spend 10% of their money on the purchase of drugs. That is to treat little over 25 million patients. If the funding is reduced, it's very obvious to expect they will continue to buy the medicines because they are only spending 10% of their money on purchase of drugs. Because all the agencies, governments achieved significant progress in containing this disease. So they will continue to buy medicines. What may suffer is educational programs, frequent testing, the WHO and Global Fund or UN desire to go 95, 95, 95. That may not be achieved. That means new patients may not be enrolled, but we expect the existing patients will continue to receive their medication. And second, countries like South Africa, India, Brazil, Thailand, China, most of the HIV drugs are funded by their own government ways and means. They are not depending much on the global fund or FAPA. About 60 to 70 million packs are purchased by Global Fund every year. So 60 million packs per year is about 30% of, even 25% of the world HIV procurement.
All right. Good morning, Mr. Chava. Good afternoon, Mr. Chava. This is Shrishti also joining in. But yes, indeed, there has been a development related to the US funding. So definitely we are tracking that. But other than that, when we come to your results, it's been a surprising and a very good set coming in from Laurus Labs. But you will also agree that the growth trajectory of the company has been really volatile of late. Though you have been continuing and doing better, help us with the guidance of the current year of FY25, and also will the growth rate that you have posted in Q3 is here to sustain?
See, the management decision to invest in capacity, we believe is a right decision. From FY21 to 24, in the 4 financial years, we have invested close to $400 million in capex. And also about $60-70 million in equity also invested. We invested in Laurus Bio, we invested in ImmunoAct. So all these are very conscious decisions by the management. If you look at our overall debt, it is less than 3,000 crores. But our capex and equity investment we've done is close to 5,000 crores, 4,000 crores. So we have done conscious investments to capture the opportunities what are coming in front of us. And when it comes to Q3, you might have seen our CDMO revenues are going up quarter on quarter. And in the Q3, we have done 400 crores CDMO sales. And we also given guidance, our Q4 CDMO sales are going to be bigger than Q3. That is because of the order book visibility and what we are delivering for various clinical programs. What is also very important, if you look at our performance last 8-9 quarters, our gross margin was always 50% or above. That is the kind of quality business company is doing. We are not doing less margin business. We're doing good margin business. And we have demonstrated in Q3 what we announced results. Our margins were 56 point, little over 56%. That is a good sign of recovery of the business. Still, several of our assets are not performing because of the underutilization of our assets what we created. And Q4 is going to be another good quarter, and then FY26 we do expect our CDMO business will do even better.
Sure. You talked about how CDMO, performance in Q4 will be better than Q3. But if you can help me with the guidance for FY25, also is there a hold on the PEP FAR program, which would lead to you lowering your FY26 guidance?
We don't see any impact for a Q4 or next 3-4 quarters because order book visibility in ARV space is very, very high. And currently we have a backlog of orders in ARV API. So we don't see any challenges there. And we are not giving guidance for FY26, so I will restrain giving any guidance, but things are looking bright. See, if you look at our performance previously, as a pure API company also, API generic company, we demonstrated EBITDA close to 30%. Currently, after several quarters, we went to 20%, and our Q4 will do better than Q3. And 26 looks better for us. Yeah. We'll give more picture, more clarity in the coming quarters.
Well, Mr. Chava, since you expect Q4 to be better than Q3, so can we expect better margins as well? Because we see that after 6 consecutive quarters, your margins are once again back above that 20% mark. So for Q4 and for FY25, what should be the outlook?
In the investor call, we retained our guidance to achieve 20%, around 20% EBITDA for the entire financial year, which means our Q4 has to be better than our Q3 in terms of revenue as well as EBITDA margin. That we stand by our guidance. And so far, things are looking very bright, and we hope we'll achieve that 20% EBITDA for entire FY25 financial.
Okay, sir. On that note, we let you go. Thanks so much for making time and speaking with us. So that's the latest coming in on the CDMO business, the margins, and the way forward for Laurus Labs.
If you like this video, then like, share, and subscribe to ET Now.